Yep.
Good stuff.
Perfect.
Okay. So who am I? First of all, I can see it keeps buzzing away. I think that's people coming into the lobby. There's nearly 100 people here already. I think that's a reflection on the confusion that there can be regarding services. First of all, I'm going to introduce myself. My name is Emmett Colleran. I studied law in the University of Ulster in 2006. I became a fellow chartered accountant in 2009. I joined the Institute of Tax in 2017, the Tax Institute of Ireland. I've worked as a financial controller in Dublin. I've worked in practice in Dublin, Belfast and Monaghan. I became a QFA in 2023. I'm not a broker though, but I do advise on financial advice as well. And now I'm currently a self-employed accountant, QFA and tax advisor based here in County Monaghan. So that is me. So what are we going to cover today? Now, there was a cross-border webinar last month on goods. We're concentrating now on services, but there will be a little bit of crossover at the start of this. Now, that crossover is only at the start, really, but the reason there is crossover is I have to be very careful here. There's people here that were there last time and weren't there. I need to consider the people that are here solely for the services. But if you think about it, whether you're trading in services or whether you're trading in goods, deductibility of VAT is the same and certain VAT filing obligations are the same and how to register for VAT. Those things are similar, so we touch on those at the beginning. We're going to start from the very start. Again, this is only very basic. It's what is VAT? Then we're going to look at the VAT on services and the current rules of cross-border post-Brexit changes, which have been massive. B2B and B2C, what's the difference between B2B, that's business to business, and then business to consumer, consumer being a private individual, and the differences when you're dealing with customers privately or businesses. Potential pitfalls, and I mentioned that, whether you could open yourself up for VAT registration cross-border when you don't even realise it. VAT deductibility rules and claiming VAT back. I'm going to mention how you claim the VAT back if you incur VAT in the north and you're based in the south and vice versa, or what if you incur VAT outside the EU, such as in Great Britain, and how to claim that back. The place of supply issues cross-border, because the place of supply is probably the most important part of determining where you charge your VAT. Is the place of supply Ireland? Is it Northern Ireland? That has a massive determining factor on what VAT rate do you apply. The two-thirds rule is briefly mentioned as well, and there's other issues as well. So that's just a brief overview of what I'm going to cover today. Again, this is a general overview. There's going to be things here that hopefully trigger in your head going, oh my gosh, am I doing that right or am I doing it wrong? And then there's obviously a lot of support available after this, direct support with me or over 100 other service providers, whether it's in the realm of VAT, which is my area, customs, regulation or employment as well, all to do with cross-border. So let's begin from the very basic. Again, don't worry, I don't talk about this I just breeze past this, but this is important to know what is VAT and why will you pay it. Remember, this is an EU tax. VAT is an EU tax, not a worldwide tax. Now, other countries do have a similar thing, like the US have the sales VAT, but it's not actually a value-added tax like we have. It's a tax borne by the end user, and I do a little bit of example of that. Everyone in the supply chain pays VAT and claims VAT back, and in an ideal world, the only person paying the VAT should be the end user. It's a tax on the value-added element of the product or service. It's European tax, but Great Britain and the HMRC did not scrap it whenever they left the European Union. So the rules that were in place before Great Britain left the EU are pretty similar. Now, they have got rid of some things such as the margin scheme for goods and stuff, which I mentioned last month. But all in all, the VAT still applies in Great Britain, even though they're no longer in the EU. Why is there VAT? Well, like any tax, it's a source of revenue for public spending. It's actually one of the highest tax takes for each country. Just behind income tax and corporation tax, next is VAT, which contributes a lot of money for both jurisdictions. It's a fair tax. Maybe people won't agree with that, but those with more money usually spend more. And as it's a value-added tax, if you're spending more money, you pay more VAT. It's also there to encourage positive behavior and to discourage negative behavior. And what do I mean by that? So the 0% rate on certain items such as children clothes, food, animal feed, medicine and EU business sales. So why would there be a 0% rate on certain things like that? And why would certain things be exempt, such as doctors, hospitals, dental appointments and education? Because the government don't want to be putting VAT on these essential services like hospitals. Imagine going to the hospital with a broken leg and saying, oh, that's €1,000 to fix your leg, plus that at 23%. No, so certain services and certain goods don't attract any VAT. Obviously, they're trying to discourage people eating maybe goods or foods that are particularly unhealthy or considered to be unhealthy. So that's why the fizzy drinks and the sweets usually have a higher rate of VAT in the jurisdictions where there's 23% in the Republic of Ireland or 20% VAT in Northern Ireland. Obviously, excise duty and sugar tax, they're not VAT, but they're also indirect taxes as well that help to discourage behaviour. So I mentioned earlier that it's usually only the end user. And here's a good example of how VAT, there's a cascading system of VAT. It starts from, say, the timber seller who cuts down the tree, and it ends up in your living room as a chair. And there's VAT being incurred in each of those steps, but VAT being claimed back. And then the only person that pays VAT really to the revenue is you, the person who buys the chair for their living room. So the timber seller sells timber to the manufacturer for €100 plus VAT. He gets €100 and he gives €23 to the revenue. The manufacturer then sells the chair to the furniture shop. He gets €246, 200 for himself, 46 to the revenue. The manufacturer will claim back the original 23% that he paid to the timber provider. Again, the furniture shop then sells to Joe Public, me, and he receives €369, 300 for himself and 69 to revenue. Now that furniture shop then can claim back the €46 that he paid to the manufacturer. So the net effect is that revenue have collected 23 plus 46 plus €69. However, they've given back 46 and 23 to the people in that chain, and the only person paying that total VAT to the revenue is the €69, which is the end user. So it should be a tax paid by the end user. Now, if an exempt supplier comes in there or a non-VAT registered trader is stuck in the middle of that stops the chain, and that's fine, but it'd be that person who incurs the VAT. So VAT rates in Ireland, believe it or not, there's 6 VAT rates in the Republic of Ireland. There's not as many in Northern Ireland. There's 0%, there's 4.8, there's 5.1, there's 9%, there's 13.5%, and there's the 23%. 23% is considered the standard rate, and it's always 23% VAT rate unless there's a specific exemption in the tax legislation. So rate of VAT is 23% unless there's an exemption, and then you change it to that rate. So just bear that in mind, and that's known as the standard rate or the higher rate of VAT. In the VAT rates in the UK are slightly, they're different. There's 20% for the standard rate, the reduced rate is 5%, and then 0% as well. And remember that 0%, and I'll mention that in a little while, 0% is our rate of VAT. It's different to exempt, and it's different to outside the scope of VAT, and I'll mention the difference between those three. I know the Jaffa cake is a good, but actually it could be considered a service too. I'll talk to you about that in a minute. If you're served that in a restaurant, it's not really a good, it's actually a service. But the Jaffa cake case is an interesting one, and it shows how complicated the VAT can get. And this was a famous case between the HMRC in the UK and McVitie's. They were arguing over whether a Jaffa cake was a cake or whether it was a biscuit. Why? Because the VAT rates in the UK were different. Cakes are 0% VAT in the UK, but chocolate covered biscuits are 20%. So McVitie's were thinking, I want this to be a cake. Why? We don't need to charge VAT to our customers. Makes our product cheaper. People will buy a lot more of it. HMRC says, no, that's a chocolate covered biscuit. We want you to give us 20% of your turnover. So there was a massive HMRC case, and it went to the highest court in the land, and they determined that it was a cake, in fact, a cake. And there was a number of determining factors. The most important one was that if you leave a Jaffa cake out overnight, it becomes hard, whereas a biscuit becomes soft. And that was one of the determining factors. Ireland followed suit, so it's now 13.5% versus 23%. And again, nuts are 0%, but if they're roasted, they're 23%. It adds on a massive amount of tax. VAT rate confusion is definitely there, especially in certain services like the catering service or the restaurant services. For example, here's a list of whether it's even a good or a service can be complicated. So like VAT on a cold sandwich, takeaway is 0%, but VAT on a cold sandwich sit down is 13.5%. One of those is a good if you take it away, but one of them is a service. Why? Because you're sitting in the restaurant, you're sitting using up their chairs, you're getting served it by a waiter, you're using their heat and light to stay warm and the roof over their head. So you're getting a service there. But if you just go in and take the cold sandwich and walk out, that's a good. So it's important to know what the difference is there. VAT on a hot sandwich is 13.5% in both cases. And if you think about it, if you get a cold sandwich or a hot sandwich and they ask you whether you want it heated or not, and they say, well, it's an extra 150, you're thinking, my God, how dare they charge me 150 just to simply toast a sandwich? Well, think about it from their point of view. They have to actually give more money over to the HMRC or the Revenue Commissioners in Ireland because they've sold a hot sandwich rather than a cold sandwich. So just bear that in mind. Fruit juice with a meal is 13.5%, but fruit juice without a meal is 23%. One of those is a good and one of them is a service. Bottled water is always 23%, whether with a meal or not. I find that one very confusing. Why bottled water, which would be considered extremely healthy, has the same VAT rate as a bottle of Coke. Biscuits are 13.5% unless chocolate covered. Biscuits are 0% unless chocolate covered in the UK. So there's a difference there. And then again, just this is an example of confusion that can arise. What about a box of biscuits that have both chocolate biscuits and plain biscuits, like a box of Victoria? Well, there is specific rules in the legislation to determine that if less than 50% of the weight of the box of biscuits is chocolate covered, you can use the lower rate. And so there is really real life examples in the tax legislation to cover nearly everything. This is a good little, you're going to get a copy of these slides, so I'm not going to go through this in any detail, but here's an example of whether something is in catering or restaurant and takeaway and the different VAT rates that apply to everything that you could buy really in a restaurant. And you can see there's reduced, there's standard, and there's zero, depending on whether you're sitting in, taking out, hot, cold, that. So just bear that in mind. Yeah, and that's just another extract from the HMRC where they're like the complications that they go into to determine whether something is either vatable or not vatable, whether it's zero, whether it's 23%, and it's all depending on like silly things like gingerbread men, whether they're decorated with chocolate, but if that's they wouldn't be considered chocolate covered if the chocolate's only used there to make eyes and ears for the gingerbread man. So this is the type of legislation that there is out there, and I'm only showing this here. It's kind of humorous, yes, but it just shows that the complications that can arise whenever determining whether what rate of VAT you should charge. As you can see here, here's the map of the EU. It's kind of old because GB is still in there, but you can see that VAT rates are determined by a certain field. So your standard rate of VAT in Ireland in the EU can't go above a certain amount, and it can't go below a certain amount either. Ireland is one of the highest ones at 23%. As you can see, it goes from nearly 8% up to 25, 20 in the Nordic countries as well. So it's just so that's just the VAT rates. Now, whether you're providing a service or a good, you need to determine whether the service you're providing is actually chargeable to VAT. And for there to be a supply of goods or services, there's four criteria. First of all, there must be a good or a service provided. So I'm an accountant, I provide a service. Yes. It must take place within the state. So that must be in Ireland or Northern Ireland. There must be consideration. So I must be paid for that, or paid in whatever, money, crypto, whatever. There must be some sort of consideration. And this is an important one at the end. The fourth one is the supply must be made in the course of furtherance of business. So I need to be in the business of accountancy services for it to be a valuable supply. And what do I mean by that? Well, all four criteria must be satisfied. Otherwise, there's no VAT. For example, if I decide to sell my house, I satisfy the first three because I'm supplying a good, take place within the state. I'm going to get consideration for that house, but I'm not in the business of selling houses. So that means VAT does not come into it, even though I am VAT registered. Same if I'm selling my second-hand car. I'm not a car dealer. So that means I don't sell my with VAT on that car, even though I'm VAT registered. So all four must be, there's obviously VAT threshold. So once you start into business, doesn't mean you automatically have to start charging VAT. Now you can elect to register for VAT, and that can be advantageous to you. So I'm just getting some notifications from chats. So VAT registration is compulsory in both jurisdictions if you breach certain thresholds. And again, they're different in each jurisdiction. And I've only mentioned the services one here because that's what we're talking about here. So if you're in the business of trading in services, 42,500 is the number you need to be careful of. That if you go above that in any 12-month period or expect to exceed that in the next 12 months, so it's not looking back for the last 12 months, it could be looking forward for the next 12 months that you know you're going to breach that. You have an obligation to register now or within 30 days. So just bear that in mind. It's not a look back for the past 12 months. It's what you think you expect your turnover to be in the next 12 months. How is the threshold determined? It's basically your turnover. There is slight difference for trading in goods, but for services, it's just simply your turnover. And once you become that, once you realize that, revenue give you 30 days to register. And I mentioned earlier there, just you can elect to register for VAT, but why would you do that? Well, if you elect, let's say your turnover was 20 grand and you elected to register for VAT, you need to start charging VAT on all your services. If all your customers are businesses who are VAT registered, they won't care that they're charging you VAT because they can just claim that back. But if all your customers are private individuals, they can't claim that back. So you automatically become 23% more expensive or 20% more expensive in Northern Ireland. Why? Because you need to start charging VAT. However, as a VAT registered trader, I can start claiming VAT back on my supplies. So if I know that all my customers are VAT registered, they don't care that I'm charging them VAT, I can claim back VAT on my inputs or my costs, basically. So it would make sense for me to VAT register if I'm under the threshold, if I'm dealing pretty much all with businesses who can claim the VAT back. It may not make sense if I'm, say, like dealing with private individuals all the time. Why? Because I become more expensive. In the UK, the turnover threshold is 90,000. Again, you can elect to register for that too. Again, you expect your turnover to go over 90,000 in the next 30 days. So slight difference. I'm not going to go into too much details. Just make sure that if you're close to those, that you get the help or your advice from your accountant. You must also register, and we're going to talk about this, and this is one of the pitfalls I've mentioned earlier. You must also register, regardless of VATable turnover, if all of the following are true. And this is based this is Northern Irish rules, slightly different in the south, but I do go into more detail. If you're based outside the UK, Monaghan, me. Your business is based outside the UK, Monaghan, me, and you supply any goods or services to the UK, I have to register for that in the UK. So if I decide to invoice a private individual in Northern Ireland, based in Armagh, and that's only €100, doesn't matter about the thresholds, I must register for UK VAT and charge UK VAT on that. The reverse is kind of similar, but not similar. Again, I'm not going to go into too much detail on this, but VAT registration is done mostly online, and I'm not going to go into too much detail on this, but just bear in mind it is taking a lot longer. Revenue are asking for a lot more information on both sides of both jurisdictions. VAT registration in the UK is done through HMRC online. Some applications need to be done on paper still, but that depends, like non-resident traders and stuff like that. So just bear that in mind. But you probably won't be registering for that. You'll probably be getting someone to do it for you. Here are two screenshots, basically, of the questions now that are being asked and why it takes so long. Because now you can get register for intra-EU VAT or just domestic VAT. So if you just register for domestic VAT, that means you can't get products zero rated or good services zero rated cross border. So that's just important to know that they're going to ask you for a lot of questions. And look at this one. They might ask for a proof of evidence of a business address here. So like registering for VAT in the Republic of Ireland when you're based in the north can prove difficult. They're going to want to make sure that you're actually trading here. Do you have an establishment here? All the details of your customers and suppliers list you can see here. Market research, business projections. It really is making it difficult now to register for VAT. So just bear that in mind. Now, they don't always ask for all of these things, and if you don't attach all of these, you still get VAT registered. But I'm just saying they can be pernickety here on what they need. Again, this is applying whether you're trading in goods or services, but there's different VAT periods in the Republic of Ireland and the UK. So the default VAT period is every 2 months. So January, February, you do that and you pay that over in March. And the same for in the UK, it's normally quarterly, so every 3 months. In the Republic of Ireland, you get annual VAT returns, but you only do one per year. That's quite rare because you need to be paying monthly direct debit to make sure you cover some of that VAT liability. You can do monthly VAT returns. And why would you want to do monthly VAT returns? Well, what if you're always in a repayment situation? And I'll talk later about if you're selling goods that are 0%, you might be always in a refund position, and it might make sense for you to do monthly VAT returns so you get the money back quicker. Biannual, that's every 6 months. Anyway, there's certain criteria where your VAT liability needs to be less than 3,000 to qualify for that, or every 4 months, like the UK. But again, your turnover needs to be, or your tax liability needs to be within those thresholds there. So in the UK, there's not just as many. You can have annual, quarterly, and monthly. And again, there's certain criteria for each of those. Again, just touching this, the VAT RTD, the annual return of trading details, is very, very important to do. And that's done at the end of every year in both the HMRC and the Revenue Commissioners. The HMRC include that data on your VAT return, but in the Republic of Ireland, you have to do a specific RTD. And if you don't do that, they can hold back refunds, they can rescind your tax clearance. There's lots of things now they're pushing that. They didn't really care about it. The RTD is a statistical return. There's no liability or refund resulting from it. It's a statistical return, but Revenue are enforcing holding back refunds rescinding tax clearance and stuff like that. So make sure you get that done. I mentioned earlier about zero rated and exempt and the difference, and there is a massive difference for you as the trader. So as I mentioned earlier, once your threshold is breached that applies to the services, so 42,500 in the Republic of Ireland or 90,000 in the UK, once that threshold is breached, you must charge VAT. But you only charge VAT at the rate of the service or good that you're providing or supplying. So that VAT rate could be 0%. Now you are VAT registered and you must charge VAT, but it'll be at 0%. You can also claim VAT back on any cost relating to the VATable supply. And I'll talk about that in a minute. You can only claim VAT back on costs that relate to the VATable supply. I mentioned here, if the good or service is an exempt supply, and I mentioned exempt supplies in a minute, no VAT can be reclaimed on those costs that relate to the exempt supply. The VAT incurred by supplier is a cost to the supplier if you're an exempt trader. So that's a little bit confusing. Zero rated, exempt, or outside the scope. But the next slide should make things a little bit clearer. So there's no difference. If I go into a shop and buy something or buy a service from someone and they say they charge me 0% VAT, exempt VAT, or outside the scope of Irish VAT, it doesn't make any difference to me. There's no VAT on it. However, there's a big difference to the seller. The seller can claim VAT back on all the costs associated with the zero rate supply, but they can't claim any of the VAT back that relates to the exempt supply. So it's important to make that difference. Outside the scope of VAT, what the heck does that mean? Well, outside the scope of Irish VAT would be meaning that if you're providing a service and the place of supply is Northern Ireland, which we will talk about later, or if it's outside the scope is if I sell my house and it's not a VATable supply, that's outside the scope. If I sell my car to my brother or sister, that's outside the scope. If I buy a sandwich in a shop and I give it to my nephew, that's not a VATable activity because there's no consideration there. First of all, I'm not in the business of selling sandwiches. So there's a lot of things that needs to be clarified because otherwise everything will become into the VAT net. Exempt postal services are exempt, as I mentioned, hospitals, charities, education, and banking. So interesting, banking is exempt. So any bank that AIB, First Trust, wherever you're banking, any costs that they incur that is VAT on them, they're not getting to claim those back. Now, there might be some banks that are involved in VATable activities, but the vast majority of banks are providing an exempt service, so they can't claim back any of their VAT. Zero rated, that's different. Food, most food, healthy food, basic necessity foods, medicine, children's clothing, books, and so those are things that are zero rated. That's a rate of VAT. It's a VATable supply. Those traders can claim VAT back as normal. So let's say you're solely in the business of children's clothing, 0% VAT. And any VAT incurred by you, you can claim that back. So you'll likely be in a refund position. Why? You're paying over VAT at 0%, but claiming back at 13%, 13.5%, 23%. You could be in a refund position there. So refund positions are totally normal for certain businesses. Exempt service. Here's an example of an exempt service. A funeral director is an exempt service, and that makes sense. Can you imagine going to bury your loved one and the funeral director says it's €5,000 plus VAT, and we have to give that to the Revenue Commissioner, to the HMRC? It wouldn't look too good. So that seller that's selling that service to you does not charge you VAT. There's no VAT on it. It's exempt. They don't need to be VAT registered because they could do €1 million worth of sales in a year, but because it's an exempt supply, it's not. They don't need to register for VAT. They cannot claim any VAT on any expenses. Even if the exempt supplier is VAT registered, they might be VAT registered for a different reason. Maybe they operate a pub or a flower selling business. Normally, undertakers are involved in other businesses too, and that other business could be a VATable business. They can only claim VAT on the inputs that relate solely to that VATable supply, not the exempt supply. Again, confusion. There's lots of help available at the Trade Hub. Zero rated. Seller charges VAT at 0%. As I mentioned, they can be in a refund position. So if you're solely selling children's clothing, paid VAT on the materials, again, you'll be in a VAT refund position. And that might be a good example of someone who might elect to do their VAT returns monthly because they get the VAT back quicker. Here's an example I've made an example of someone who is exempt and charging VAT at 23.5%. So funeral director who's also a flower seller. And those would be linked, obviously. You're going to sell flowers to the bereaved and to the family. You're also going to do the burial services as well and the wake services. The trader has exempt and VATable sales. The funeral services VAT, the flowers are not. Strangely, coffins are standard rated. So whenever they're buying their coffins, there's 23% VAT on those coffins. So any VAT paid directly to the VATable sales can be claimed. Any VAT paid directly related to the exempt sales cannot be claimed. But what about VAT that's paid on both? For example, the light and heat. So let's say the funeral director and flower seller has a building, and half of that building is involved in the burial services, cremation services, but also half of it is for the flower selling. That means that the heat and light is being for exempt services and VATable services. Well, there is a way of doing that, and it's usually apportionment, and the HMRC and the revenue will allow you to use a reasonable way of determining that, whether it's floor space, whether it's staff that are allocated to certain. So let's say you had 10 staff and 5 of them were involved in the flower selling and 5 of them were involved in the exempt supply. 50% of those heat and light VAT would be claimable. So that's what they do. It could be based on turnover, but as long as it's reasonable and revenue say that it's reasonable, that's fine. Now, UK, this is specific to the UK. I'm not going to go into detail on it, but it is in the next slide, and you do get a copy of the slides, but I don't want to confuse people too much. But there is a de minimis rule in the UK where if you are providing exempt supplies, you can actually claim VAT back on your inputs, even if you're supplying exempt supplies. Now, there is certain rules in that. The exempt supplies, VAT needs to be under a certain amount per month, such as £625. Yellow highlighted, can be complicated. Trade Hub, all those details will be on in a minute. This is the slide I'm talking about. It's basically, look at it in your own time. I don't want to go through it now, but basically in the UK, if you're providing exempt services and VATable services, you might be able to claim VAT, all your VAT back. So make sure you know that, talk to your accountant, or again, get help with us. So what can you claim VAT on if you're providing services cross-border? Well, you can claim VAT on most VATable expenses. Normally follows the rule of income tax deduction or corporation tax deduction. So if you're doing up your profits for your tax liability, normally if something's allowable for an income tax deduction or a corporation tax deduction, you can usually claim the VAT back, but it's not always the case. Obviously, if you buy a good or a service for private use, you can claim the VAT on back. So as I mentioned earlier, every trader effectively remits VAT to the revenue, and the difference between the output VAT and the input VAT is what's given to the revenue, and the end user should be the only one that pays over that VAT. Again, the UK has a slightly different scheme as well for accounting for VAT, which maybe some of you may not know. It's known as the flat rate scheme. Basically, you pay over a percentage of your sales to the revenue, just a certain percentage based on profession. So let's say you had VATable sales in the period of 10 grand, you simply pay over 11% of that to the revenue, to HMRC, and that just satisfies your VAT bill. Now, if you worked it out, that could be better or worse for you. So let's take it for an example. You bill a customer for 1,000 plus VAT in the UK, so that'll be 1,000 plus 20% VAT. That's £1,200 in total. There's different percentages depending on your industry. So accountants, I think, are 14%. Some are lower than 11%. But I've used a photographer as an example. The flat rate for a photographer is 11%. So instead of him doing a VAT return, as in getting his sales VAT and claiming VAT input VAT, he can just simply multiply the 1,200 by 11% and give over £132 to revenue, to HMRC. That may work out better or worse. What if he had a lot of, input credits that month? Let's say he had VAT bill, or he had an accountant's bill that week. He had the heat and light that month. He had a lot of inputs that month that would have actually reduced the VAT liability further. It may not, but that it's up to the discretion of you to choose that. And again, you need to talk to your accountant about that, whether it makes sense to you, because sometimes it doesn't make sense. You could be losing out on VAT there by using that, or you could be gaining. Again, the wee yellow thing at the bottom here, the Trade Hub, why? Because this is so confusing at times. If you're trading cross-border, there's things you can claim in the south and there's things you can't claim in the north. In the ROI, you can claim VAT on diesel, but not petrol. So if you're providing services all over the country, 32 counties, depending on where you are and whether you're VAT registered in the north or south, you may not be able to claim the VAT. So in the north, you can claim it on both. In the Republic, only diesel. In the Republic of Ireland, you cannot claim VAT on food. So if you go out for a business lunch or a staff lunch, you can't claim the VAT on any food. In the UK, you can. Taking client out for lunch, again, you can't claim the VAT on that, but you can in the UK. VAT on accommodation, which seems very, very strange. If I go to a conference in Cork, or not a conference, if I go to meet a client in Cork and I stay over for the night, there's VAT charged to me. I can't claim that VAT, but I could if I was UK. In the Republic of Ireland, you can't normally claim VAT on cars, even if you're need the car for a salesperson to drive around the country selling. Now, there is some small exemptions if you're doing a lot of business mileage and that, but in the UK, you can claim the VAT on the cars if you're Again, the capital goods scheme for large assets, and that's again, if you're involved, if you're buying something that's very, very expensive, such as a large machine or a building, there's different rules whether you can claim the full VAT on that. Again, I mentioned at the bottom there, the trade hub is very important here. Are you claiming VAT when you shouldn't be, or are you not claiming VAT when you should be? Why not get us to review that for you to make sure you're getting everything you are claiming, allowed to claim? Cash receipts and invoice basis. Again, this applies to services, very, very important. You can be either paying over VAT on the cash receipts basis or the invoice basis. And what's the difference in that? Well, there's a big difference. Whenever you, under the invoice basis of accounting, you pay over the VAT on the date, based on the date that you invoice the client. So if the client doesn't pay you for a number of months, it doesn't matter. You're paying over the VAT based on the date that you invoice the client. The money received basis of account, which is also known as the cash receipts basis, you pay over the VAT whenever you receive the money. Best explained by a small example. The invoice basis. And I've used this as an ROI because there's a slight difference. Now, there is an invoice and cash basis in the north as well. Let's say I did an invoice the 14th of April last month. That's not paid to me until the 14th of June 2025. I must return that VAT in the March-April VAT return, the date of the invoice. That will be paid on the 23rd of May, but I haven't even got that VAT because it's not paid until the 14th of June. Cash flow issues there. Now, let's reverse that. Let's say there was the cash receipts basis. Again, the dates are the exact same. I dated that invoice the 14th of April. I wasn't paid until the 14th of June. I must return that invoice on the May-June VAT return, which is the 23rd of July. And again, I got paid a month earlier than that. So there's a cash flow advantage there, simply from returning the VAT based on the cash receipts basis, as opposed to the invoice basis. That is allowable in both jurisdictions. However, in the Republic of Ireland, the cash receipts only applies to your sales. You can still claim the VAT on the purchase invoices when you incurred the VAT invoice date. Again, that's helpful. However, in the north of Ireland, if you go for the cash receipts basis, it's based on both your sales and your purchases. So you can't claim any VAT on purchase until you pay the purchases as well. So there's a slight difference there. But should you be doing it on an invoice basis? Sometimes you don't have a choice. Why? Because there's rules for it. Some people can and cannot claim the cash receipts basis. In the UK, your taxes and supplies need to be under a certain amount, £1.35 million. In the ROI, it's 2 million. Now, you can do it on the cash receipts basis if you're in sort of the trade of where you're dealing solely with non-registered customers, or over 90% of your customers are non-registered customers, such as in a pub or a shop. You can do it on that basis as well. So just bear that in mind. If you have any questions on the cash receipts or invoice basis, again, there is help available there. Now, the crux of this is the cross-border trade and services. And it's vitally important, especially being on the island of Ireland. The amount of trade that goes between the north and the south in January and February alone was over €1.7 million. And cross-border, we're going to sort of concentrate on Ireland to Northern Ireland and Northern Ireland to the Republic of Ireland. But cross-border can involve Ireland to NI, NI to Ireland, Ireland to GB and outside of the EU, GB to Ireland, Northern Ireland to GB, GB to NI, Ireland to the EU, GB to the EU, and NI to the EU. Lots of stuff going on there, and it's only two jurisdictions, the HMRC and the revenue. So just bear in mind, there's vastly different rules depending on whether you're trading with the EU or outside the EU or inside the UK and GB. And to complicate further, and the very bottom line here is very, very important, goods are considered inside the EU for VAT, services are outside of the EU for VAT in Northern Ireland. So there's a dual VAT system in the north. Last month I did trading in goods cross-border. Trading in goods cross-border, Northern Ireland is still in the EU customs VAT. Trading in services cross-border, Northern Ireland is outside of the EU, and that's very, very important. 4 possible scenarios. You could be business-to-business supply of goods, not covered today. Business to consumer, that's the private individual in goods, not covered today. That was covered last month. But then business to business supply of services. So that's me, an accountant, invoicing a solicitor who's in business cross-border. Business to consumer supply of services, B2C cross-border. Me invoicing a private individual in the north, or a UK-based accountant invoicing a private individual in the Republic of Ireland. So that's what we're sort of concentrating on today. Questions you need to ask yourself if you're trading cross-border. What are you selling? Are you selling a good or a service? Because one of them will be in the EU and one of them will not. One of them will have different places of supply rules, and we'll talk about the places of supply in a wee second. who are you selling to, a business or an individual? And how do you know if you're selling to a business or an individual? You need to make sure you've got evidence to prove who you're selling to, because the HMRC and the revenue will ask you for that evidence if you are zero rating it. Where is the customer based? Ireland, NI, GB, outside of the EU. All those factors are very, very important. Is there Irish or UK VAT to be charged? And then that might seem obvious, but me as a trader in the Republic of Ireland thinking, well, I only need to charge Irish VAT. No, you'll see later with the situations where I will open myself up to automatic UK VAT registration if I do one little bit of business 4 miles away in Armagh. What rate of that? It might seem obvious that I need to charge 23% VAT on everything. Is that the case? No, it's not, and you'll see in a minute. The place of supply is vitally important to establish, because if the place of supply is not in Ireland, there's no Irish VAT. If the place of supply is not in Ireland, there is no Irish VAT. If the place of supply is not the UK, there's no UK VAT. So just bear that in mind. But it's about establishing the place of supply. Another big underlined thing that I've mentioned before. Why is it underlined again? Because it's very, very important. Northern Ireland is outside the EU for VAT on services. Northern Ireland is outside of the EU for that. What does that mean? Northern Ireland services, I think there's a message there about goods. Don't worry, I can answer those after outside of this webinar. There's no problem there. Northern Ireland services to Ireland. The place of supply is where the customer is, believe it or not. That may seem strange, but if a Northern Ireland business is invoicing in a Republic of Ireland business, the place of supply is actually where the Republic of Ireland business is, not where the NI business is. So there's no UK VAT. The Irish company will self-account for the VAT. This is known as the reverse charge mechanism. And that avoids unnecessary VAT registrations in both jurisdictions. There's some exemptions to that, such as use and enjoyment rules and work on like land and buildings. So like if an architect does work on a building in Belfast, but he's invoicing an Irish customer, the place of supply is actually where the land is. And we'll talk about that in a wee minute. But just what I'm trying to get at here is that a business to business, the place of supply is where the customer business is, not where the supplier is. The place of supply will be where the customer is. That doesn't mean the Irish customer, the Irish seller has to VAT register in the UK. There's what's known as the reverse charge mechanism. Again, a little bit of an example. A Northern Ireland solicitor invoices an ROI accountant, say me, for legal services. That's B2B, so the place of supply is where the customer, me, is located. The reverse charge applies. So me, the Irish account, I self-account for that Irish VAT on my VAT return. There's no requirement for the NI solicitor to register for ROI VAT, and the reverse is the same. Now you're thinking, why am I paying over VAT on a service that I received? Well, you pay it over, but you also claim it back. So the net effect is nil in terms of being out of money, assuming you have full VAT deductibility. And I do talk about that, I think, in a minute. So again, to reiterate, the supply of B2B services, the place of supply is usually, because we do talk about exceptions now in a minute, is usually where the business receiving the services is established. So Irish suppliers will not normally charge Irish VAT on services to a business established outside of Ireland. Instead, the business customer will self-account for the VAT in the UK. It is outside the scope of Irish VAT. So NI business customers will self-account for the UK VAT. Just careful of thresholds if you're not VAT registered. So let's say I'm not VAT registered in the Republic of Ireland and I'm in business, but I'm under the threshold, and I decide to receive legal services from the north. The place of supply is Ireland, and I need to account for that VAT. If the VAT on that, if the value of that reverse charge brings me over the VAT threshold, I would need to VAT register. So just be careful of that. Just the thresholds for VAT registration includes any services that are reverse charged in your country. Again, that's a little bit complicated. Again, there's help available for that. How do you know you're dealing with a business? You could be dealing with anyone. You could be dealing with a private individual. And remember, you have an obligation to confirm the status of your customer. Now, it's normally easy enough if you're dealing cross-border. You can look at their VAT number, but it's up to you. And revenue and the HMRC will say, well, you didn't get enough proof to be able to not charge VAT. Where is your proof? So whenever you are supplying, and I'm not going to go into too much detail here, but that's the EU there. It's very easy to look up an EU VAT number, but Northern Ireland is no longer in the EU. So how do you prove yourself? How do you prove that someone in Northern Ireland is in business? Yeah, so EU is slightly different. There's different rules on what you need to put on your invoice if you're dealing cross-border in services. You need to put on that the reverse charge. You don't charge 0% VAT, and this is probably what the majority of people do. And again, there's no loss to revenue here, but if you are supplying a service cross-border and you charge 0% VAT, it's not technically correct. It's literally no VAT. You don't even have a VAT rate, because zero rate VAT, if you put in 0% VAT, that might go into your return and train details, it might go into your advice, it might go into your Interstat, and it shouldn't, because it's not a 0% VAT. It's actually outside the scope of Irish VAT. There's no VAT, and it doesn't exist. It's UK VAT. So just be careful there. If you're trading cross-border in services, you shouldn't be charging 0% VAT. You should be just charging no VAT. There's a slight difference there. So how do you prove the business customer? Because I'm going to mention in a little while, if you're providing services to provide private individuals cross-border, the VAT rules are completely different. So you could Google them. You could do a company search. Okay, I found the company. Their registered address is Belfast. Google search, yeah, the website says that. Looks good. Proof that the customer is a taxable person. Again, request their VAT number, search for it on the UK database. Look at very obvious things, search for the company, ask for a printout, just go to the website, printout, just make sure you've done a little bit, you'll be able to tell fairly straightforward. It's the same criteria, whether it's ROI to NI or NI to ROI. I did mention that there is certain exemptions to the place supply rules. So the default is that if it's B2B, business to business cross-border, the place of supply is where the business recipient has received. So there's no Irish VAT if you're trading business to business services cross-border, and vice versa is the same. Here's the main exception, is that land or movable property. So let's say you're doing work on a land or building. Again, that's specific to land or building, and it'll be where that land or building is. And I've just done two examples of why, again, the confusion starts again. Some services would be considered directly linked to immovable property or land, such as the construction or demolition of property, surveying or assessing a specific property, valuing property, including for insurance or loan purposes. They would all be VATable where the actual property is. So let's say I was considering buying a building in Belfast, and I got an estate agent in Monaghan to value it. There's no Irish VAT involved here, believe it or not. One of us would have to register for UK VAT and declare the VAT there. So what would normally happen is I would simply just charge VAT, and that's what's happening. There's lots of VAT being unintentionally not being paid to the right jurisdiction. Like the Irish VAT was not applicable there, but it was paid over to revenue. It should have been UK VAT. But then again, there's services that you think might be directly related to land that aren't. So drawing up plans that aren't for a particular site. If I asked an architect in Monaghan to design a general building and I end up building it in Belfast, that's not UK. But if I asked him to design a building that I'm going to build in Armagh specific to that site, again, the place to apply will be the UK. So it's very, very confusing. Again, TradeHub is there for helping that. Here's a few examples to drive this point home. A Cavan-based architect designs a Spanish hotel for a Belfast-based customer. So we've got ROI, we've got Spain, and we've got Belfast customer. The Cavan architect must charge Spanish VAT to the Belfast-based customer, even if most of the work was done in Cavan or all the work was done in Cavan. There's issue about VAT registrations and then claiming the VAT back. So the Cavan architect is charging the Belfast customer Spanish VAT. The Belfast customer, what the hell are you doing? How can I claim this VAT? You actually can. However, if the Belfast customer hired the Cavan account to do general plans for a hotel, i.e. not specific to a region, normal place of supply would work there, and they'd be a lot less complicated. So that's probably what's happening. Let's say there is a specific building in Spain or across Europe. You can just put on the invoice probably just general accountancy or general architectural services. But technically, if you're designing a building that's outside of the EU, the place to apply is outside of the EU. So bear that in mind. The reverse charge does not apply to certain land-related services, and this could cause big problems for certain people. So it does not apply to architects, but does to estate agents, and this could cause big problems for VAT registrations. So when this is best worked out by example, and I do apologize if I'm starting to complicate things, or this isn't specific to any particular business that's in here. You might be trading in something completely different, but it is just important that if this is triggering something, there is help available. So an estate agent in Northern Ireland provides real estate services to a Dublin business regarding commercial property in Monaghan. That could be very, very straightforward. The place supply is Ireland, and the business customer in Ireland accounts for the Irish VAT. That's pretty straightforward. It's B2B, and it's reverse charge. But an architect can't do the reverse charge. And again, that would mean that they would have to register for VAT, even if the customer is already VAT registered in the jurisdiction. That seems very unfair. I'm not sure that the reasoning behind that, but just bear in mind that certain reverse charges aren't applicable. So just because you're dealing B2B and the place supplies are of the jurisdiction, my point I'm trying to drive home here is it's not automatically a reverse charge. In most cases, it is. Restaurant and catering services, the place supply is where the restaurant or catering service is physically carried out. That sort of makes sense. There's an exception to the exception, is that if you're on board a train or an aircraft, or if you sit down on a train and eat a meal, it's where the point of departure is. But that's only if it's in the EU. So the enterprise trade, believe it or not, goes from Dublin to Belfast. If you just buy a Mars bar, that's a good. But if you sit down and get a meal, that's a service, and that's a little bit different. And again, it just adds to the complication. So again, these are exceptions to the B2B standard rule. Admissions to an event, the place supply is always where that event is, and that would make sense, because if you had a concert in Dublin and been organised by a Belfast-based event organizer, and they were selling it to a Belfast-based customer, the place supply is where the actual event is taking place, which would be Dublin or whatever. So just bear in mind that this is an exemption to the place supply. Hire of means of transport. And again, why am I putting up this here? Because this happens all the time, and there's no doubt that the VAT is not being done right. So if you're hiring a car, there's different rules, whether it's for short term or long term, and the short term is less than 30 days. So short term, the place supply is where the vehicle is placed at the disposal. Okay, so let's say a Belfast private individual arrives in Dublin Airport and hires a car for 2 weeks. Place supply is Ireland. The hire company charges Irish VAT. That Belfast private hire company would have to charge Irish VAT. A Belfast private individual arrives in Dublin Airport and hires a car for 2 months. The place supply is where the customer is based, Northern Ireland. So the hire company charges UK VAT. Again, two very similar situations. He only rented the car for a different amount of time, completely different VAT rules. Again, the reason I'm mentioning this is that it's complicated and that there is help available there. Use of enjoyment provisions. So this is sort of it's included in Northern Ireland and the Republic of Ireland, and this is sort of to stop silly situations where VAT has been charged where it really shouldn't be charged. So they've brought in this use and enjoyment. So certain services that you are using and enjoying, the place of supply is where they are used and enjoyed. What does that mean? Well, the letting or hire of goods to someone outside the EU or the UK. So let's say a Chinese company hires computers for use in Ireland. That takes place in Ireland and be Irish VAT. If those use enjoyment provisions weren't there, there could be no VAT charge, and that wouldn't be correct. Electronically supplied services and telecommunication services such as O2 and Vodafone and 3 and stuff, that's where the customer resides. Okay, so that can create a lot of difficulties for someone like a big company like BT. They would have customers all over the world, and their place of supply is where that individual is. So they might have customers all over the world using their telecommunication service or their electronically supplied services, meaning multiple VAT registrations in multiple countries all across the world. However, there is a simplification in what's known as the one-stop shop. And I don't go into too much detail on this because this is very specific to a certain, but there is a one-stop shop for distance selling rules and stuff like that. But there is also a one-stop shop for services. What does that mean? It means that BT would not need to register in all of these countries. They simply register in whatever they're based, say, let's say the UK, and they would declare all their VAT to the HMRC. HMRC would take that and distribute it to all the countries. So it's very useful and means no multiple VAT registrations in lots of countries. But just be careful that if you're, say, selling electronic side services like webinars, or if you're selling online teaching or something, will you fall into this? You might. And just be careful, you could be opening yourself up to VAT registration obligations in different jurisdictions if you are selling those electronically supplied webinars, lectures to people in the north, to people in Spain. So it does happen. Okay, so we were talking there about business to business. So that's a VATable business like myself invoicing a VATable business in the north. Two businesses trading. Relatively straightforward, unless there's an exemption, which I mentioned. Now we're moving on to business to consumer. So business to private individual. Me invoicing a Joe Soap in Armagh to do their tax return, something like that. The place of supply is where the supplier is, me. So the complete reverse of B2B. And that just shows how complicated or why it's important for revenue for you to get proof that you're dealing with a customer who's VAT registered or not VAT registered. An accountant in Ireland invoicing a private individual in Spain, I will charge Irish VAT. And it's important, and I did not put down Northern Ireland there on purpose. Why? Because Northern Ireland is not in the EU, and there's certain exemptions to consumers outside of the EU. So I'm based in Monaghan, a private individual in Middletown, which is about 4 miles from me. They're outside the EU, and I have big differences whether I'm dealing with someone who's inside the EU or outside the EU. And again, best shown by an example. So if certain services, and this again is for both ROI and NI, okay, so I'm dealing here with the full 32 counties here. There's certain services that are provided to private individuals who are established outside the EU. The place of supply is actually outside of the EU. So if I provide a service to a private individual in the north, the place of supply shifts from me to them. Why? Because they're outside the EU. No Irish VAT is charged. Why? Because I've said it maybe 10 times. If the place of supply is not Ireland, there's no Irish VAT. This includes the service of consultants, engineers, consultancy firms, lawyers, accountants, and photographers. This does create a strange situation where certain services are cheaper if you get it performed by a different supplier cross-border. Or are they? They are in certain circumstances. The reverse is the same as the UK. They have copied that rule since they left the EU. So I'm going to use this as an example. And I think I use a photographer as an example. Yeah, I do. This is so common. My brother's a photographer. He would do weddings in the north, he would do weddings in the south, and he'd do weddings in Scotland and stuff. So this is a normal situation. And it's the same with me. I would have Northern Ireland-based clients as well, private individuals and businesses. So let's say we take an example of a Monaghan-based photographer. A Northern Ireland couple is getting married in Belfast. The cost of the photographer is 2.5 grand ex VAT. The Monaghan photographer does not charge Irish VAT. Why? Because these people are private individuals based outside of the EU. Remember, Northern Ireland is outside the EU for services. If the couple engaged a Northern Ireland-based photographer, the Northern Ireland photographer must charge VAT, UK VAT. It's just a UK supplier invoicing a UK private individual. So the cost of them is 2.5 plus 20% UK VAT. That's €500 more expensive, or is it? No. And this is where the competition rules slightly change. No, because the registration threshold for non-UK traders is nil. So that Monaghan-based photographer will immediately need to register for UK VAT and charge that 20% UK VAT. Again, no change in price between using a UK photographer or an Irish-based photographer. Are all suppliers registering for UK VAT? I wouldn't be so sure. It's the same for solicitors and accountants. So if I do work in the UK for a private individual, I must UK VAT register immediately. I've queried this with revenue, and it doesn't apply in reverse, which is really, really strange. Now, it applies for some services, but I'll use this as an example. The Irish photographer will have the responsibility to register for UK VAT immediately and account for VAT as the zero threshold applies to him because he's not VAT registered. In Ireland, in the Republic of Ireland, it only applies to certain services, but that doesn't include accountants, doesn't include photographers, but it includes catering services, you can see, hiring of movable goods, the supply of electronic services, but it doesn't mention, and you'll see from this link that I've sent you whenever you get the slides, it doesn't include accountants. So this skews competition. This means that an Armagh-based caterer must register for Irish VAT if supplying catering services to a private individual in Monaghan, okay, as it is included in the list above. It also means an Armagh-based accountant does not need to register for Irish VAT if they provide services to a private individual in Monaghan, as is not included in the list above. So does this affect competition rules? Yes, it does. I need to charge VAT to private individuals in Ireland. An accountant based in Armagh who does work for the same private individual in Ireland does not need to charge UK VAT or Irish VAT. I've queried this with revenue because it's not fair. Because the reverse is I automatically register for VAT in the UK. The Northern Ireland based account does not need to register VAT in the South. And that can't be fair. Oh, right. Good. We're nearly there. Well, 10 or 15 minutes. I'm going to take a slight bit of water. It's a very sunny day, and you're all here stuck talking. Listen to me talk about VAT. I don't know what you did to deserve this, but at least you could be out enjoying ice cream, but at least you know what the VAT rate on ice cream is, whether you're sitting down or taking it away. I'll ask at the end. You should know that. I'm going to now briefly mention the 2/3 rule. Now, the 2/3 rule is specific for services. And what does that mean? There's not really a 2/3 rule in the north, but there is a 2/3 rule in the south. So goods are often supplied in the provision of a service. So you get someone to fix your washing machine. That includes parts. It also includes services. There's a good and there's a service. But those rates of VAT might be different. So how do you account for VAT? Do you split it in two and VAT 23% and VAT 13%? Well, there's what's known as the 2/3 rule. So if the cost of the goods in the full invoice exceeds 2/3 of the total amount, you charge VAT at the goods rate. If it does not, you charge VAT at the services rate of that. Again, an example is best here. You hire a plumber to install a bathroom for €5,000 plus VAT. Again, 5,000 plus VAT probably wouldn't even get you a toilet nowadays. But anyway, I'm using this just as an example. The plumber installs a bathroom for 5,000 plus VAT. The price of the showers, the bath, the tiles, etc., is €3,000, and the price of his labour is €2,000. So the total is 5. The goods cost, the goods portion of that is 60% of the total. So it's less than 2/3. So he can charge that at 13.5%, which is the rate of VAT for plumbing services. If the price of those goods was over 66.6%, 2/3, he'd have to charge VAT at 23% on the full amount. So just be careful on that. Now, there's ways around that he could invoice you separately for the goods and separately for the services and stuff like that. But just be careful of the 2/3 rule. If you're involved in providing a service that includes the provision of goods as well, just make sure you're charging the correct VAT rule. Now, the 2/3 rule does not apply to certain services such as subbies, so subcontractors invoicing principal contractors. I'm not sure if there's any contractors on here, but just the 2/3 rule does not apply to the subbie. It also doesn't apply to the repairs of cars and tractors or agricultural machinery. So if you ask someone to fix a tractor and the parts are 90% of the value and the service rate 10%, again, you can still use the service rate. And the UK has slightly different rule about the mixed supplies of services. Again, I've put the guidance in there. I don't want to go into too much detail. It's not 2/3. It's slightly different, but it's a little. If you think the 2/3 is complicated, look at the VAT, the guidance on the UK side of things. Again, Trade Hub. Vice and Interstat. Again, I'm just going to briefly mention this. Many of you in here are probably doing Vice or Interstat. Vice is it's like an EC sales list. If you're providing services or goods, you need to give certain information to the HMRC and the Revenue Commissioners. What is the Vice or EC sales list? Well, it's Irish and NI VAT registrators with zero rate goods, services, or both to VAT registrators. So you need to give over details to the Revenue Commissioners, such as who you're dealing with cross-border. And it's interesting, if you're dealing in services only, Vice or Interstat do not apply to you. Why? Because Vice involves services to EU, but as we know, and I've said it 10 times now, is that services are outside of the EU for VAT. So Vice does not apply. You don't put any details of trading cross-border and services on your Vice return, whether that's in Ireland, Republic of Ireland, or Northern Ireland. And again, we're not talking about it here. Now, there's certain, and I want to briefly mention this, even though it's more so to do with goods, but does apply to services too. Vice can be done monthly or quarterly, and that depends on your turnover. And just bear in mind that pre-Brexit, you would have included Northern Ireland services, Great Britain services, Great Britain goods, and Northern Ireland goods. Post-Brexit, you don't include the services in either jurisdiction, and you don't include the goods in Great Britain. So that might mean that you're below the threshold for doing Interstat in the first place. After Brexit, maybe you don't have to do Interstat anymore. So just bear that in mind. You could still be doing Interstat when you don't really need to. Why? Because your EU sales have went way down since GB left, because they're no longer considered. But just as important to note, that advice is not applicable to you if you're trading cross-border in services. And again, InterTrade is not applicable because InterTrade is solely for goods. The vice return or the EC sales list is for goods and services. InterTrade is solely for goods, so it's not applicable here at all anyway. Previous. The electronic VAT refund. Hopefully a lot of you know what this is. What is the EVR, electronic VAT? Did you say VAT is not applicable in VAT? Okay, I'll get more detail on that one. EVR claim is available for both ROI and NI businesses. So what is the EVR? Well, it's a mechanism to claim VAT incurred in another jurisdiction or another EU member state. Now, there is a way of getting VAT back if you incur VAT outside of the EU, Great Britain. I mentioned very briefly on that. Remember, and I'm quite surprised at seeing this, I do see it quite a lot, you cannot claim UK VAT on an Irish VAT return or vice versa. So if you're doing your Irish VAT return and you end up having an invoice that's got 20% UK VAT on it and you stick that into your Irish VAT return, no. The only thing you can pay over and claim on an Irish VAT return is Irish VAT. The only thing you can claim and pay over on a UK VAT return is UK VAT. But you could be trading cross-border, and if you filled up your truck in the north and were charged 20% VAT, how do you claim that back? Well, there is a mechanism. It's called the EVR claim. So let's say, as an example, an Irish business, me, incurs UK VAT attending a conference in Belfast. I can make a claim through the EVR system through Irish Revenue. I don't need to go to HMRC to ask for it back. Revenue will do it for me. Revenue will deal with the claim by contacting HMRC. Just be careful on deadlines. So Irish businesses have 9 months after the calendar year to claim. So let's say I incurred this VAT in Northern Ireland or Spain or wherever, I can claim that by the 30th of September 2026, so 9 months after the calendar year. It's slightly different in Northern Ireland. You have about 6 months after the prescribed year. The prescribed year is to the 30th of June. Again, just bear in mind that if you are incurring VAT, to do claim it. Now, there is admin costs. Well, whether you do it yourself or not, they do ask for some documentation, and if the VAT's only £10 or £20 or €20, is it worthwhile? There is a minimum amount you can claim in one go anyway, so the revenue don't let you do less than 50, or, so just maybe build them all up and then claim them all at once. The 13th directive claim sounds a bit complicated, but this is basically if you are based in Great Britain and you want to claim VAT back that was incurred in the EU, and by the EU I mean the Republic of Ireland, which could be common enough. A London-based business incurs VAT in Ireland, they can claim that. There is a mechanism for them to claim that back. It's a little bit more longer and drawn out, and it's not an EVR claim because it's not in the EU, but you can claim that back. And the reverse is the same. If you're an Irish business and you're in the service industry and you incur VAT because you go over to Great Britain and you incur VAT over there, there is a mechanism there as well to claim the VAT back. So just because you don't incur the VAT in the jurisdiction that you do your VAT returns, that VAT is not lost. Here's something that's relating to services and might be trigger something here. The VAT 60A relief. So this relates to non-established traders who are providing a service into the Republic of Ireland or into the EU, but I'm using the Republic of Ireland here. This allows the service provider to be charged VAT at 0% by the Irish supplier. So let's say, again, an example. Let's say I employ or I provide payroll service and I get someone in the north to do it. It allows me to charge them 0% VAT because it saves them me charging them VAT and then having to go to the EVR claim to claim it. So they can just get a VAT 60A authorization to allow me to zero rate it. It's just cash flow saving, admin saving. Instead of me just charging them 23% VAT and then them having to go claim it back, this just allows me to charge them 0% VAT, nil effect to revenue, nil effect to them. It's just a cash flow saving. The services can't be just a one-off. It has to be an ongoing service. So it's just not, it can't be just one-off service where I provide them with one. So let's say I'm providing payroll services for a Great Britain supplier and I'm always having to charge them VAT. Not if they apply for that there. It allows me to charge them 0% VAT. It's a good relief for certain businesses. Some case studies. Hope you're paying attention. Yeah. So an Irish architect designs an office block in Brazil for an Irish contractor. 2 Irish people doing business, but designing an office block in Brazil. Is there Irish VAT? No, There's absolutely not. It's not zero rated. It's not exempt. It's outside the scope of Irish VAT as it's land related. So the place to apply is Brazil. And is there Brazil tax implications? I have absolutely no idea. But you have to get Brazilian tax advice there. Monaghan Company considering acquiring a large office block in Donegal. They hired an Armagh-based valuer to value the property. That would be normal enough. The place to supply is Ireland. Why? Because the office block is in Donegal. The reverse charge applies here, so Monaghan Company would self-account for the Irish VAT. There's no need for the valuer in Armagh to have to register for Irish VAT. A Monaghan-based solicitor is engaged to create a will for a Tyrone private individual. Again, that could be common. A Tyrone private individual getting a will done by a solicitor based in Monaghan. The customer is outside the EU, I mentioned this before, so the place to supply is Northern Ireland. The solicitor must register for UK VAT immediately and charge 20% UK VAT. I've simply reversed this. The Tyrone-based solicitor is engaged to create a will for a Monaghan-based private individual. Private customer outside the UK, the place to supply is outside the UK, no UK VAT and no ROI VAT obligations. Again, it skewers competition there, in my opinion. Northern Ireland subcontractor working in Dublin. Any subcontractors on here? Any Northern Ireland subcontractor working in Dublin for a principal contractor? There's no VAT obligations. Why? Because it's the principal contractor that must do the VAT. So there'd be no VAT obligations there. However, if a Northern Ireland subcontractor working in Dublin for a private individual, let's say a Cavan-based contractor, sorry, an Armagh-based contractor goes down to Dublin to build a granny flat, they would have to, and for a granny and granda, immediate Irish VAT obligations there. So just bear that in mind. So that's important to note. I just want to highlight this here and to take note from both sides of the jurisdictions. Revenue are really increasing their compliance checks. I've been in business for about 20 years, and I don't know whether they've got more staff or whether they've got more resources. I don't know. But VAT returns are being scrutinised, questions about why some stuff are being claimed, and compliance checks, whether it's a desk audit or a full audit, they really are increasing it, and they're not afraid to throw these penalties out. VAT estimates are being issued within weeks for late returns. So if you don't have a VAT return done, they'll issue you with an estimate. And if you don't file that VAT return, they'll go to collect that estimate. It's usually €500. If you don't pay that within a certain amount of time, they get the sheriff involved. The sheriff will write to you. If you don't respond to the sheriff, the bailiff comes along with the truck outside your house. I've had clients ring me saying the bailiff's out to contact my car. It's just getting, like, I have a direct line now to the revenue sheriff in Carlow, and it's just try and be compliant as best as possible. As you can see, there's a list here of failures to file your VAT returns, failure to keep proper VAT books and records, and all the fees are 4,000. So I did get, not me, but a client of mine did get a 4,000 fine for not filing a VAT return. And I goes, oh my gosh, that is extremely harsh. The VAT bill is usually only €500 or €600. And they said, basically revenue said to me, oh, that's okay, we'll bring it down to €150 fine. But they just want to basically give the client a kick up the hole, because it is in legislation that they can charge whatever they basically want, because once you're non-compliant, they can charge penalties of over 100% of the tax bill. Interest is accruing every day at 10% usually. So just my point here, and it's probably one of the most important slides, and it relates to both services, goods, whether you're in the north or the south, is try and stay as compliant as possible, because I am noticing compliance checks are on the up. The UK have sort of a different penalty system. It's a bit like the penalty point system for cars. You're allowed a certain amount of penalties before you get penalty points, and then they sort of get knocked off after 24 months and stuff. And so there's different tiers, like not submitting a quarterly VAT return, that's one tick and you're allowed 4, and if you get to 4, it's £2,200 fine, stuff like that. So they have a sort of a penalty point system, which hopefully none of you know about because you're all compliant. What we didn't cover today, we covered a lot, and I probably confused a lot of you. That was not the point. The point here is that this is a general overview of services. Cross-border services is very complicated. Even for someone like me who's dealing with it every single day, I do find situations where I really don't know until I look into it, because there's so many differing rules now, and Brexit has really thrown a spanner in the works. We didn't touch on the travel agent margin scheme. So travel agents who are providing a service, there's a travel agent margin scheme where you only pay your VAT on the service profit. filing and completion. How do you actually file a VAT return? There's no point in going into that in this much detail. There's too many people on here that are doing it every single day, but there is support available if you are starting off and you need help there. VAT invoicing requirements, and this is very important. I didn't mention this, but if you are trading cross-border, there's certain things you should have on your VAT invoice, such as the customer's VAT number, whether it's a reverse charge, not having 0%, but having outside the scope of that, those little small things. VAT on cross-border subcontractors, I mentioned that very briefly at the end, but there is you see them every single day, north to south, south to north, people in their vans at 6 in the morning. There is tax implications there to make sure you're doing it right, that the subcontractor is not opening themselves up for cross-border tax implications for working in the south if they're on site for more than 6 months, RCT being deducted and how to get that RCT back. If those acronyms are making sense to you, like RCT and stuff, again, I haven't touched on it, get into contact with us in InterTrade. We can help you with that. And again, there's more questions on the Trade Hub. It's nearly 12:15, which leaves some time for questions. I'm going to pass over to Marcus and get a glass of water.
Okay, well, thank you very much, Emmett. That was an excellent presentation and a well-earned glass of water. Some really fantastic information in there. And so hopefully everyone has a lot more understanding of different things they need to be aware of when it comes to VAT and services. Before I move on to questions, I just want to chat a bit about what support InterTrade has available to help you, and so that you can be as compliant as you possibly can. So we offer a program here at InterTrade Ireland where we offer basically fully funded one-to-one consultancy support with either Emmett or another one of our registered service providers, up to a value of £2,000. And basically that can be used in any of the 4 areas listed here in this slide. That can be on VAT, that can be on customs, that can be on sort of regulation or employment matters. So obviously we've talked a lot about VAT on services and VAT on goods in a previous webinar. Customs rules if you're moving goods, say, across jurisdictions, regulatory matters if you're having difficulty with anything from GDPR to CE marking, and also employment matters, so payroll, taxes, rules about hybrid working, things like that. If you're not sure whether you're doing things right, or you just don't know where to start, let us know. We're here to help. We've got a network of specialist consultants who can advise you on a one-to-one basis. Just before we move to questions, and just a reminder again, everyone, please put any questions in the chat that you would like answered. We just make aware of another couple of upcoming webinars, one on the 20th of May and one on the 17th of June. These will focus on sort of cross-border selling skills and provide sort of a practical insight into key actions you should be taking when looking to sell cross-border. And these will be particularly useful for businesses both who have never sold cross-border before, but also those who are looking to increase the level of sales cross-border. So I hope to see you there at those webinars. We will share a link to the registration for those webinars along with the copy of the slides and the recording, which will come out in the next 48 hours or so following today's webinar. Contact details there are also on the screen, and again will be in the slides if you have any questions and would seek to contact us here at InterTrade Ireland.